if you got a long time horizon, an index product is a great way to get diversified exposure while not having to take a bunch of taxable events by like trying to kind of swim around and chase different kind of narratives and pumps and dumps yourself. So if you can buy something that gives you diversified exposure, that lowers the volatility a little bit, that you can feel more comfortable just holding and not selling when it goes down, that's how you win.
Welcome to Steady Lads. In this episode, I interview young Crews from Index Coop. Index is a protocol that builds on-chain index funds. Traditional index funds are worth around $11 trillion. That's around 25% of the total stock market. And I believe in the future, we'll see something similar in crypto where a huge chunk of money sits in crypto index funds. That's because investing in crypto is hard and complicated, and people like easy and not complicated. And crypto index funds make it so that with one click, someone can own a basket of assets and get exposure to a trend, narrative, or sector that they're interested in the crypto space. And I think that Index Coop is primed to potentially fulfill that role, and wanted to do this podcast so that I can learn more about how they operate and where they're going next. Just to start it out, can you introduce yourself and just like who you are and how you relate to Index?
Sure. Yeah, my name's Crews. Go by @TheYoungCrews on all platforms on the internet. I'm the ecosystem growth lead at Index Cooperative. I've been with Index since the spring of 2021, so coming up on 3 years here. At Index, we build on-chain structured products. So you can think of it as you buy an index token and get you exposure to a bundle of assets or a particular strategy. We've got a few different categories of products. But like I said, I'm on the growth team for 3 years, do marketing, communications, partnerships across the team. We're a team of about 12, so you got to wear many hats.
Well, you kind of went into it a little bit there, but can you kind of just give a brief overview of kind of everything that Index Coop encompasses? Am I saying that right? Is it co-op or Coop?
Formerly Index Cooperative. The Coop for short is a fun little shorthand. We like to lean into our owl imagery. I believe a coop is really only for chickens or hens, but we like to shorten cooperative to Coop for fun.
Well, perfect. Can you give like an overview of Index Coop co-op and just kind of what the whole system encompasses?
Yeah, the best way to walk through it is to kind of take you through the history of where we came from. So we were launched in October of 2020 by two partners. Set Protocol are the ones who built kind of the underlying tech stack that all of our products kind of operated on. We've since upgraded it, but they're one of the founding partners. And then the second founder would be DeFi Pulse, who kind of an analytics company that kind of were the founders of TVL, Total Value Locked, as a metric, one of the biggest metrics in DeFi that kind of just shows you how many assets are locked into a particular DeFi protocol. So those two married together. Set Protocol had this underlying tech stack for building index tokens. Index tokens, of course, you buy the simple token and gives you exposure to a bundle of assets underneath. And then DeFi Pulse was kind of the analytics or methodologist for our first product, the DeFi Pulse Index, which is a market cap weighted index of the top DeFi tokens. It's on Ethereum, so all of our products are ERC20 tokens that are redeemable for the underlying assets. And DeFi Pulse and Set Protocol came together to launch this DPI index at the tail end of DeFi summer in 2020. It was really the first index token of any kind to be launched on chain. And Index Coop was launched as kind of the growth marketing arm for this new product that had just been, brought to market. So we were to be kind of perform the rebalancing of the product, as well as do all the growth marketing business development for that product. And since then, we've launched many, many more products. And Set Protocol has given the keys to us, to the protocol. We've since forked it, created Index Protocol. Essentially, they're no more. And DeFi Pulse, no more as well. Index Cooperative is now building our own on-chain structured products in a variety of categories. We began with that market cap weighted index of DeFi. We've expanded to leverage products, other sector products, some yield-bearing products, and we can get into the rest of those categories here today. But that's kind of the overall, what is Index Cooperative? Where did it come from?
I actually didn't know a lot of that stuff. I knew you guys were related to Set. I actually thought you guys were still tied into them. So that's really interesting history lesson about the history of Index. What you mentioned some of the indexes. What total products do you guys like? Can you go through the different products you guys have and kind of explain each one?
Sure. Yeah. So like I mentioned, DeFi Pulse Index is like the simplest category of a product. It's just an index, a sector index, kind of similar to what you may see in the traditional finance world, where you buy a structured product and it gives you exposure to a particular sector, maybe a theme of companies. The next one we went to launch was our first leverage product, ETH 2x Fly. What that does it gives you 2x exposure to ETH, the underlying asset. And the way that it does this is by actually using DeFi. The underlying protocol is Compound. It was built on Compound's money market. What Compound does is lets you borrow and lend assets, right? It's a money market protocol on Ethereum. So the way ETH2X Fly works, you provide ETH as the underlying asset into Compound's money market. You want to get to 2x exposure to that ETH. So what do? You borrow stable coins against the ETH and buy more ETH. So ETH2X Fly targets a 2x leverage ratio. It floats around a little bit between 1.7 to 2.3x, but you're floating right around that 2x leverage. So you buy this ETH2X Fly token, you get double the exposure to ETH. If ETH goes up 5%, ETH2X Fly goes up about 10%. If it goes down 5%, ETH2X Fly goes down 10%.
Is there risk of like liquidation with that one?
So liquidation risk is still in play, but we've got automated risk management built into the product such that if the leverage ratio starts to drift too high, again, if it gets to 2.3, it's going to automatically rebalance back towards 2. The liquidation threshold will be somewhere around 3x leverage, right? So as soon as it gets to 2.3, we already snap it back down to 2 for you. So really the value add of these products is automated leverage management. You don't need to worry about watching your liquidation threshold or rebalancing your position the way that you would if you were trying to create that leverage position on Compound yourself by interacting with Compound, with your own wallet, clicking the buttons and whatnot. We've got contracts that do that for you.
So that's just one product. You have a bunch more that are way different. So that's a very unique, specific product, leveraged ETH. Go into some of the other ones.
Sure. The next one will be the Metaverse Index. We launched that puppy in the spring of 2021 when I was just arriving on the scene at Index. So what this does is give you exposure to kind of all of the gaming, metaverse, decentralized world protocols. The OGs in this category were Axie Infinity, Decentraland, and Sandbox. So, kind of the gaming sector. This one really exploded in late 2021. The big kind of marker people will remember was when Facebook changed their name to Meta. That was a very big green candle for the entire metaverse. So it was a really good one to own during that period. Of course, there's been a lot of volatility in this sector. A lot of users have exited a lot of those original protocols. So you'll see new names in the Metaverse Index. If you go check it out now on our site, on our marketing site, you'll always see kind of what are all the underlying assets in these indexes because they can change, right? You want to know what you're getting exposure to. Current names in there. There's new stuff. Merit Circle is a really cool one. Kind of their goal is to just kind of proliferate on-chain gaming, broadly speaking. So they do a lot of partnerships. They do a kind of investing within their DAO. They've got a token called MC. That's one of the top ones in there. There's Render Network. There's some AI stuff going on in there. Still a really interesting sector. It's obviously very early for the metaverse, as evidenced by kind of people will roast Zuckerberg and Facebook anytime you see kind of those Wii-looking characters that they put out for what the future of the metaverse looks like. Famously, the visions of the metaverse that some of these tech leaders haven't quite come to us yet. But Apple Vision Pro is coming out soon. There's still a lot of promise there. So you can buy MVI if you want to get broad exposure to the metaverse. We also have a Bitcoin 2x leverage that works the same way the ETH one does. So that was obviously really popular in the last couple of weeks with the Bitcoin ETF approval that happened. You want double exposure to Bitcoin, but on the Ethereum blockchain, you can use our BTC 2x Fly token. This year, we'll be launching a new suite of leverage tokens. We're going to bring back the inverse products to get inverse exposure to the price of ETH or Bitcoin, which, as a kind of a neutral provider of structured products, it's nice for us to have a product for both bull and bear markets that people can utilize. So I'm excited to get the inverse ones back on the table.
And you guys have like a large cap index. I feel like you have some sort of CoinDesk product. You have a bankless product. You guys have a lot of different indexes. One thing I always wonder, or like when I look at your guys' site, is why don't you have more? Like, I know you have a lot, but like, what stops you from doing like, here's an AI index, here's a DPIN index, here's a L2 index. Like, I could think of so many like thematic things that people want to tap into those narratives, but they don't understand what thing to invest into, a gaming index. and it seems like that'd be a product that'd be pretty popular because again, so many people just literally, they know that maybe crypto and AI, they can sense that that could be a really cool thing, but they don't know which ones to buy. They don't really know the difference between, maybe this kind of scammy one and the ones that are actually building. So I'm curious, like, what stops you guys from adding more products, and why are you going at a slower pace?
Yeah, what are the constraints to building a new NX is kind of the crux of this question. Um, we always say the three toughest challenges with trying to build an index product are liquidity, liquidity, and liquidity. So for a lot of these smaller tokens that you may want to include in something like a gaming index, an AI index, gaming index is maybe not the best example because there are so many protocols in the gaming, and we kind of just wrap that gaming sector mostly up into the metaverse index. We've explored doing a gaming index a few different times, but so liquidity is the number one challenge, right? There's got to be enough liquidity on Ethereum mainnet or on an L2 if we're going to build the index on an L2 for people to get in and out of the product safely, right, and not experience huge slippage. So for our products, it's all about reducing risk for users. So we're not going to build some index where you're going to take a huge haircut when you're trying to get out of the index one day. So we've got pretty robust requirements for how much on-chain liquidity is required for our product or for a token to be included. We also have things like a kind of a Lindy requirement. It's got to be around for a while. We've got to know that it's safe, that it's not going to vanish one day before you put something into a new index. And then there's just too much turnover in a lot of these sectors as well that are like kind of a hot flavor of the month. You hear of it like once every few years, like, why isn't there an AI index? That's one that people get, we get a lot of feedback of saying, hey, why isn't there an AI index? And I ask them like, hey, what would be in it? And one, they usually don't have an answer at all. But if they do, there's a few tokens that are brand new, right? That are they're not proven on the market. And if you ask them again 6 months later, what's in an AI index? It's like a whole new list of tokens that weren't in it 8 months ago, right? So basically, that's just liquidity still. All of that said,
that makes sense. I mean, things like a layer 2 index, you could have Optimism, Arbitrum. That one would make sense. Gaming, you have Immutable. There's quite a few big games coming out that would make sense. AI, you're right. Like maybe a Kosh, maybe Tau, but their on-chain liquidity is horrible. So you definitely want to be able to get exposure to that. So I can see that as as a main, maybe something holding back. But I guess, are you guys thinking that direction of like thematic indexes and saying, like my mom, she or my grandpa would be like, yeah, I heard about this, and just goes and buys that. It's actually protecting the user in a lot of ways, because if they're not buying, an index from you guys, they are buying those kind of scammy coins that are the flavor of the month and then, get rugged or collapse later down the line. So, yeah, is that the direction you guys are thinking, like, as ultimately more on-chain liquidity expands?
Yes, thematic indexes are great. Definitely will always be kind of a core tenet of our product strategy. Like you said, simplifying the buying experience for investors or for people that want exposure to assets on chain. They know that they want to buy crypto, but they don't know exactly what, and they don't want to spend a ton of time researching it. Like, they may not have the skill set to kind of do proper due diligence on assets, and they may not have the time or desire. So like, that's absolutely what we're building for in general. And we will build more sector products. But yeah, I mean, for a long time, what were the dominant use cases on chain? There's DeFi, there's kind of NFTs were the two huge use cases on Ethereum. We built an NFT index, but there just wasn't enough liquidity to really support it. So we had to sunset that product. But when a new use case is robust and we're sure that there's a market there, then we'll absolutely try and bring the product to market. I should dig in a little bit more to the large cap index. I think that really kind of gets at this use case of, I don't know exactly what to buy, but I know I want exposure to the market. So it's called IC21, the Index Coop Large Cap Index, and it gives you weighted exposure to all of the largest tokens that are on chain. So Bitcoin and Ethereum are in there, but we've kind of adjusted the methodology to use kind of a square root market cap so that they don't dominate the index too heavily, right? If you adjust it by market cap, Bitcoin and Ethereum, you're already at like 80% of the index. So we use square root market cap so you get broader exposure to kind of the longer tail of assets, stuff like Solana, Avalanche, et cetera. That gets you in all the exposure that you want. You know, if you're unsure exactly what to buy the market is kind of that's what the prominence of index products generally has kind of proven over the last several decades in finance, right? ETFs and low cost indexes, proliferated by Vanguard, BlackRock, et cetera, have kind of won the financial mind share over the last several decades.
So you guys are almost remind me of like a little BlackRock or something. Like you guys are out here, you're selling financial products essentially, and you want to sell the products that are the safest, kind of time proven, but also that people, there's demand for. I could even see things like, a Solana index. So it's like, and you could probably weight heavily if you don't have enough liquidity for certain things. It's like most of the index is in Solana. And then as the ecosystem expands, you kind of expand your allocation into some of these other projects or Arbitrum index where you have ARB and then GMX and, some of the bigger protocols. There's so many ways and flavors for you guys to do it that for me, it's like the reason I'm interested in index is it just makes sense to me that eventually in the future, people are not going to want to do like there's too many pitfalls of investing into singular tokens, and people are lazy. Like look what they do in the traditional markets. They invest in indexes. They don't want to spend time knowing if they should have it in Tesla or Nvidia or whatever. There's like I'm just gonna buy an index because I don't know what to do. And crypto is like 1,000 times more complicated than the traditional markets. So what are people going to inevitably do? Index products. And I could see like why aren't wallets like Rabby or MetaMask saying, hey, in our wallet, buy an index of these funds like directly? Why isn't like even Coinbase should be plugging into you guys and being like, by the way, buy this index? Like it seems like such a successful product for the industry, and that it's almost only a matter of time before we see increased adoption. As far as your guys' different products, what's been the most successful so far?
Well, first, I just want to go back. I wouldn't compare us directly to BlackRock or those kind of giants in traditional finance. It's a whole new world on chain. Like we really are just a tool set to kind of automate what you could already do yourself on chain. Kind of like I mentioned, using the composability of DeFi to our advantage. And I guess that's where I'd go to answer your current question here. Like, what has been the most successful? Really, the key for us is about not trying to predict what people want, but kind of observing what they're already doing on chain. So the best example of this is the leverage staking trade. Okay, when Ethereum finally merged to proof of stake, and you could get a yield by staking your ETH, kind of one of the dominant trades beyond just staking ETH. First of all, so I mean, I guess first I should say staking ETH has been the most popular thing that people want to do on chain, especially on Ethereum, obviously, where kind of our smart contracts reside. So we have a diversified staked ETH index that gives you broad exposure to the top liquid staking tokens on ETH. It just makes sense to kind of minimize your risk by not putting all of your eggs in one basket into one particular staking protocol. So you've got like idiosyncratic risk. What if something happens to that one protocol and all of a sudden, all of your staked ETH is going to take a huge haircut? So you can diversify it across the top. It's up to like 6 different staking protocols now in DSETH. But what was the next thing that people did after just staking your ETH, which makes a lot of sense to go ahead and do, is leverage staking. So people would take their staked ETH, their liquid staked ETH, to be more specific. Lido's staked ETH was obviously the first mover in this category, and they have an extremely dominant market share because of that, and because it's just a very good product. It works really well. It's got deep liquidity. People would take that Lido staked ETH, deposit it into a money market like Compound I mentioned before. Aave is obviously another huge one that we've integrated with and built products on top of as well. They would take that liquid staked ETH, deposit it into Aave, borrow more ETH against it, and go and stake it again, and then do that again and again and again. We saw that this was kind of the dominant trade in DeFi, and we were like, you know what, we can help with that. We can apply that automated risk management that we have built into our smart contracts that we got a lot of reps with our ETH2X Fly product that gives you leverage exposure to ETH that I mentioned. We've done 1,000 or more rebalances of that ETH2X Fly product in an automated fashion with no liquidations. Excellent success. We said, all right, let's take those contracts and let's build a leverage staking product. So we built ICETH, the interest compounding ETH index, that automates that leverage staking trade for you. It's built into Aave. It uses Lido's staked ETH and Aave's money market to give you extra exposure to stake ETH. And that worked really, really well for a time. ICE even passed DPI as the largest index token of any kind by market cap. And people have been holding that one for more than 2 years now, I think, the ICE product. Maybe a little bit less. I think it came out in April of 2022. That was for sure the most popular DeFi strategy that we've been able to kind of tokenize.
When I earlier when I compared you guys to BlackRock, but minus the corporate structure, right? So what I mean by that is they sell products, they sell financial products that make it maybe sometimes easier for the average person to invest in sometimes more complicated things. And so you're essentially taking that sort of concept and putting it enshrining it in code. So like and rather than having to have BlackRock in the middle kind of managing it, mitigating all this, you have this code doing all this for you. And so it's like an on-chain kind of version of that same sort of concept is what I meant. You mentioned that the biggest one is the ICE, or the ICE has been really successful lately. I was curious, how do fees work with Index? Like, do you guys take a percentage of like the fees generated, or how does that work?
Yeah, we have streaming fees on our products. So there's an annual fee that you pay by holding the product. Again, I'll have to always use DPI as kind of the example because it's maybe the simplest. So there's a streaming fee on DPI of 0.95% or 95 basis points. What that means is you're paying a little bit less than 1% per year for holding DPI. So the way that it's paid is unique because we're built on chain with smart contracts. The way that it is paid is kind of through inflation, actually. So when you're able to redeem your DPI for the underlying assets, the Uniswap, Aave, Compound, Maker, etc., those are the top DeFi tokens by market cap. So that's what's inside the index. You're able to redeem your DPI for those assets at any time. And the way the streaming fee is paid is basically we issue new units of DPI to our treasury. That's kind of stated in the smart contract that was deployed when the product was first launched on chain. We can't change it the way that works. And essentially, we get new DPI every year based upon how much DPI is outstanding in the market, how much people have bought. So your DPI is worth 0.95% less of those underlying assets per year. And that just kind of accrues naturally on a block by block basis. You'll never really notice the streaming fee. You just hold the DPI. You don't lose any of the tokens. If you buy 10 units of DPI, you still have 10 units in your wallet, but it's just worth 0.95% less every year.
Got it. Okay. So it's like less than 1% essentially annually fee, which is very comparable or lower than most TradFi products, as far as I'm aware.
Yeah, and way lower than most DeFi fees. A lot of people don't really know the fees that they're paying when they use DeFi protocols, because people are kind of there's a large culture of kind of YOLOing it in crypto, degen culture. People's degen scores are even celebrated. Maybe don't read the fine print too much when you're using perpetual futures, for example. Really, really high fees there. But yeah, we've got much lower fees than kind of those sort of DeFi protocols. And yeah, it looks a little bit like what you've seen be successful in traditional finance in terms of low-cost index products.
Yeah, even when you're doing a swap, I mean, you're paying fees on that swap. You don't even notice the DEX fees. You don't notice the fees you're maybe paying in MetaMask. You don't notice the fees as far as like slippage. Like most people aren't paying attention to these things. I think some of that has to do with the fact that maybe in TradFi, you're like, cool, I'm going to make 10% this year. And so 1% fees, that's a big chunk. That's like 1/10 of what you're going to make all year. Where in crypto, you're like, I'm hoping to I'm hoping to 100x on this one. So you don't really care if you're paying a 1% fee.
Yeah, even on centralized exchanges, right? Like it's not quite traditional finance, but on Coinbase, if you're just using kind of the normal swap interface, you're paying at least 1% usually. But people are like, all right, well, my return target is 10x, so I don't care, whatever. And sometimes that works. If you catch an up move, then right, you paid 1%, but do you care? No. But we try to charge a competitive and very fair fee. Our goal is to build the index products that we would recommend to our friends and family that kind of just simplify people's ease of life in navigating crypto.
I recommend people to Index all the time. I'm like, hey, you don't know what to invest into? Just go to Index. Go get go get one of their Index products that suits what you're looking for. And that's a great way to get started. And, you could essentially go, hey, put money in Bitcoin or ETH. And then after that, to me, it's put money in Index. And then, if you want to do some research and really get into space, you can go down and invest in whatever you're looking to. How much have you guys been able to make off fees so far? Like, how much do you guys typically make annually?
Yeah, obviously it's dependent on market conditions. I think our total TVL kind of assets in index products right now are less than 100 million. So, roughly 1% of TVL is kind of a good barometer for what our fees are. So we've made a few million in total. I believe we've hit 2 million, but we certainly have hit a $1 million year. At the high water mark of our assets, we're over 550 million. At kind of the peak of the last bull market, and of course has kind of bled down a bit from there, and we're just starting to see things pick back up with the crypto winter defrosting.
So your guys' kind of path to success is, you want ideally as many assets under management as possible. So 10 billion, 50 billion, 100 billion one day, like that would be ideal to you. Is getting as many people invested into these indexes as possible. And that's the way that Index Coop makes, increases the revenue. Is there any other ways to increase the revenue outside of that?
Yeah. And I wouldn't call it, again, assets under management, because in this new on-chain world, self-custody is the name of the game, right? So we don't control anyone's funds. We don't manage any funds. But there are other. So for our leverage products, especially, we've got mint and redeem fees. As well as kind of those streaming fees. So, the mint and redeem fee, sounds like it would probably be pretty self-explanatory, but when you mint new units of the index of the leverage token or redeem it, right, cash it out, you're going to pay another kind of small fee. Again, it's far less than 1%. It's less by kind of bips than the streaming fee. So I think 10, 25 bips or so you're going to pay on a mint and redeem fee for our leverage products, as well as the CDETI ETH Trend Index product that we just launched with CoinDesk. That one has a mint and redeem fee on it as well.
What would you say is the biggest thing that's been holding back adoption for something like these products?
Yeah, it's definitely the culture of the early adopters who are here on chain. People want to take their own risks. People want to be degenerate. And I think people think that they can beat the market because they are this early adopter that's here on chain, while their uncle, the regulators are telling them that crypto is a scam, but they've done the research. They know that it's not. They think it's really promising. They think it's really exciting. They think that they're going to make huge returns because obviously, crypto's gone from zero to multi-trillion-dollar asset class. So, obviously the percentage returns on people that have been a part of the journey so far are really, really high on a percentage basis. And people think they're going to do that. And I think some people, they don't even necessarily think that they're going to beat the market, but the culture here is to try and to be self-determinate. They may not even think that they're going to beat the market, but they're going to die trying. So people don't necessarily want to buy index products because they think they're early and they think they're going to beat the market, or that, and that pervasive culture has hurt, broadly speaking. And then another huge headwind, obviously, is the regulatory environment. Has really held us back from kind of getting distribution partnerships with the fintechs of the world that would really unlock a new user base for us. And people that don't have that same self-determinate degen score, or like celebrate their degen score type of culture, that's a much better product market fit for index products. So in the US, it's been extremely unfriendly for people that want to offer crypto products to their user base. And for us, since we have these structured products that kind of look and smell a little bit different than just a plain governance token, where, our assets are redeemable for other assets, there's been even more uncertainty for kind of a fintech of the world to say, like, can I offer an on-chain index to my users? The answer is, we have no idea. We're not sure. The regulatory uncertainty is such that you have no idea what you're allowed to do or not. You don't know if the SEC is going to sue you, or if they're going to, So we've started to make some nice inroads into that market a little bit outside of the US. We've been integrated with eToro recently. It's been a huge win for us. They're a pretty large fintech platform, kind of based out of Europe. So we're able to offer DeFi and metaverse exposure to their users, and so far it's been a really strong success. They've seen pretty good kind of uptake rate when they promote the product to people. People are generally pretty interested in it. Like, oh, diversified exposure to Web3. Yeah, that sounds pretty good. Sounds like something that I want to have in my portfolio.
Can you go into that more? I didn't even know about this. So eToro, I'm familiar with what eToro is. You're saying like on their native app, like when somebody goes on their website, they can be like, oh, I want to get this index of crypto tokens.
That's right. Yeah, we were onboarded, I think in October of 2023 as kind of we were able to offer our smart portfolio. So essentially you can go on eToro, you can search index, or they push it to people sometimes on kind of the homepage and whatnot. But we're on there as one of many kind of smart portfolio providers. And basically our offering gives people diversified exposure to Bitcoin, ETH, and then DeFi and Metaverse. So it's essentially our DPI index and MVI index that are added on eToro. Works a little bit differently because they kind of have their own exchange built into eToro, and not every single asset that is in the DPI index and the MVI index is offered there. But the ones that are offered, we've built kind of a smart portfolio that gives you exposure to Bitcoin, ETH, essentially DPI and MVI, kind of in one click on eToro's fintech platform.
So eToro's essentially using their own liquidity. It's like almost a specialized product. Is that what you're saying? It's not like they're clicking that button and it's buying it on chain.
Yeah, basically it takes the same methodology that we have out there for DPI and MVI. And it's like, okay, I'm going to follow, I'm going to get these people diversified exposure to DeFi and Metaverse, the ones that Index Coop has selected. But only, there's just a few that are missing that are in like the MVI index on chain that just aren't offered within eToro, because they source liquidity from their own kind of centralized exchange, essentially, rather than being able to buy every single token on Uniswap or any decentralized exchange like our index products do.
So to kind of go back to what you were saying earlier, your user base isn't the like gambling, degenerate, kind of typical, really high risk tolerant crypto user, but it's actually a very average user. And by average, I mean like the majority of people.
Right.
Because, by definition, average is most people. And average people, they invest in really boring things like indexes. And indexes, even crypto, like a normal index, what's it doing? Like, I don't know, 5%, 6% a year, maybe. And what's like your guys' top performing index done?
Essentially, it does what ETH does. That's, obviously we've got a ETH2X Fly product that, or I think maybe an interesting stat, BTC2X in the last 1 year has done over 100% return, in a single year, because Bitcoin's done really well. And if you had leverage exposure to Bitcoin, you're doing pretty darn well. I mentioned the average holding period, it's supposed to be a little bit lower, but guess what? If BTC goes up over 1 year, BTC2X is going to go up even more.
What about DeFi Pulse Index? What's that done over the last year?
Maybe the more like important thing for DPI, or I guess like the larger headwind, has been its performance against ETH.
Okay.
But over the last year, DPI has gone up 32%. So yeah, that's probably more than the S&P 500.
That is way more than the S&P 500. And that's what I mean. Like it's a safer, boring product. Like, even if it's doing in line with ETH, you're not just investing in ETH, right? Like you're diversified across multiple different tokens. And so inherently, like you have a measure of safety that maybe you don't have if you're just in Bitcoin or ETH. It's a different product with a different kind of risk vector. And so if you look at somebody and they're like, okay, I can invest in the S&P 500 index, or I can invest in this large cap, Index Coop index. I think there's a lot of people that like maybe they're scared of investing in crypto, but they would feel comfortable investing in something like that. And if they can make 30% in a year, oh my gosh, they just outperformed the stock market by 3 years, which is pretty hefty, I would say.
Yeah, I would say, not financial advice. Obviously, I'm not a financial advisor, but just doesn't need to be either or, right? Like most people have exposure to most people that do invest have exposure to the stock market through kind of, whatever their 401ks, they've got a little bit of, got a retirement fund, but they still want to dabble in crypto. So just take a small percentage of your portfolio, and instead of just punting it on a couple of, tokens that you heard about, that like Google pushed you some random ads about Dogecoin and like, oh, maybe I'll like take a flyer on that. You can get diversified exposure to crypto assets as well. And yeah, like you mentioned, DPI has outperformed. It has a much higher beta than the S&P 500, for example. Obviously, all these crypto assets are extremely volatile and have, when they go up a lot. So you want to be in these markets over the long term. Buy the Index Coop Large Cap Index. IC21 gives you broad exposure to all of those assets. And yeah, when crypto goes up, if you're a long-term bull on crypto, which if you're listening to this podcast, you probably are, you want to hold that for a long time. And if you got a long time horizon, an index product is a great way to get diversified exposure while not having to take a bunch of taxable events by like trying to kind of swim around and chase different kind of narratives and pumps and dumps yourself. So if you can buy something that gives you diversified exposure, that lowers the volatility a little bit, that you can feel more comfortable just holding and not selling when it goes down, that's how you win in the long run.
This seems like such a killer fit. I know so many friends that they'd never invest in crypto, but they would definitely invest in something like this. So many people. But I would imagine the one thing holding them back has to be, it is not easy for someone not in the crypto space to go on chain and buy one of these things. So I mentioned earlier, have you ever considered or talked about like integrating with a wallet? I know MetaMask has their snaps, maybe making a snap, or talking with a company like Rabby or Phantom, or some of these wallets. I feel like that's a great value add for them. Like, hey, by the way, in the wallet, you can buy this index that gives you exposure. I don't know why they wouldn't want to add that. Have you considered that? Or
yeah, we have had pretty successful partnerships with some wallets. I think Rainbow Wallet has got the DPI index kind of featured on their Explore page for a long time, since I think 2020 or maybe 2021 is when they first rolled that out. So they've been a good partner of ours. Zerion is another good one. In their Explore page, there's a DeFi indexes tab that we occupy most of the top slots on, because it has all of the index tokens that exist, and Index Coop is the leader in on-chain index products. So yeah, I mean, wallets definitely are a great entry point for people that already have a wallet. But I think an even larger hump for some people is that they don't even have a wallet to begin with, right? Maybe they've been on a centralized exchange and they've bought on Coinbase, they bought on Revolut in Europe is a bigger one, maybe even on eToro. Thankfully, they can get exposure to index products there. But if they don't have a wallet, then you can't get exposure to our assets, because we're not listed on centralized exchanges, because these folks have not felt comfortable to necessarily approve our assets. We had one big win in 2022, I think, of getting DPI listed on Gemini, but Gemini has since gone downhill. They got caught in the fallout from the FTX saga, from the Celsius saga, Genesis and all that. I won't get too deep into it, but centralized exchanges are a huge entry point. We've got applications in with Coinbases, the Binances of the world for our products, and it's a long, slow process to try and get our stuff approved. But yeah,
that'd be huge.
I think that'd be a huge win for them as well. Like, just to be able to, it could really help change the narrative for them, that they get grilled by Congress and whatnot about like, oh, like, you were offering what coin, Shiba something, and the volatility is this many 1,000%. And it's like, yeah, well, that's what our users have demanded, because they see the huge green chart and they chase that. But if they were able to promote, on their front page, like, hey, like, maybe like calm down, maybe just buy a diversified basket of these crypto assets. The volatility is so high that you're going to be just fine with this. It's going to be plenty for you. I think that a lot of brands, a lot of business development and marketing teams that I talk to are like, yeah, you know what, that we would like to offer that to our users. That would maybe make the average person scrolling past our ad more likely to actually click it and go through and being like, oh, look, they have some diversified indexes. Like, actually, maybe my financial advisor recommended that I buy the S&P 500 a few years ago. I did it, and like, that's actually gone pretty well for me and my family. So maybe that's something that I'd like to repeat on chain as well.
Yeah, I mean, I literally couldn't agree more. I also, you mentioned good for the space, with regulators and things like that. I imagine having most people don't even know there's like multiple facets to crypto. They think meme coins, gambling, and kind of like general degeneracy. I don't think they understand that like there are these unique sectors. Like, one of the most exciting ones to me is like the DeSci sector. It's really small. You couldn't have an index for it right now. But decentralized science is really, really cool. And like some of the things that they're building and doing are really awesome. And obviously people are starting to take note of the DePIN sector, where you have like this decentralized physical infrastructure that, you have Helium now launching this mobile plan. I think they're growing by like 200 users like a day or something. I don't know, something crazy like that. And it's actually a pretty cool, really cheap mobile plan. So you have these kind of real world products being built, or Sweatcoin. I don't know if you ever heard of that, but they have 140 million users. It's crazy. And it just helps people, incentivizes people to work out more. And they got a deflationary token, good tokenomics. So you have these products hitting, hitting the shelves that are actually useful, that actually retail actually loves. And I think that's going to increase, and getting more exposure and kind of knowledge of these various facets of crypto, I think is useful for everyone. And even like, I'm full time in the space, I have a hard time wrapping my mind around everything that's going on. And you simplify it, and the bigger it gets, the more it does need to be categorized, and the more it does need to be simplified. And I think Index is just primed. I think you guys are early, but I think you guys are primed for what is coming. I wanted to kind of switch gears and talk about the Index token. So can you explain what is the Index token, and kind of how is it used within the ecosystem?
Sure. Yeah. The Index token. We've got a governance token called Index. When Index Coop was first launched, again, Set Protocol and DeFi Pulse were kind of the co-founders. They created this token, and the genesis was given out to all of the early liquidity providers for that DPI index. So people would buy the DPI index and provide liquidity on Uniswap V2, I believe is what it was around back in these times. And you got rewarded in Index for doing so. So it was a nice way to kind of bootstrap and reward the first early users, the early power users of the DPI index with this Index token. So they were actually getting ownership of the protocol. Really like revolutionary idea early in crypto, right? Was you actually earn ownership in the things that you use as a user. You're able to be rewarded in a token that is owning the thing that you use. You own a piece of the internet. Very cool. So this Index token has been around since 2020. We use it for governance, meaning when people want to propose a new index, it goes up in our governance forum, and the holders of Index are the decision makers. They get to decide whether this is a good idea or not. You get to vote yes or no on all of the products that we launch, on any sort of governance decision. It's kind of the largest use case for Index. And there's also a concept of meta governance. So there are many governance tokens within the DPI index, the MVI index, et cetera. And the governance power for those tokens is held in the smart contract for the product. It doesn't flow through to the holders of the index. It flows to the holders of the Index token instead. So when Uniswap or Maker has a vote on their governance forum that the Uni holders or the MKR holders for Maker gets a vote on, we have a vote on our forum. And the Index holders get to vote on what they think Uniswap should do for that governance decision. And the Index holders get to wield the governance power of all of the governance tokens locked within the Index as well. So the most interesting use case of this was a while back, Faye and Rari eventually merged, but Faye Protocol wanted to get their stablecoin, Faye, listed onto Aave. There was a proposal out on the Aave forum, and they wanted to make sure that they voted yes, because they wanted their stablecoins to get added to that lending market. So what they did is they bought up a bag of Index and then used that Index to vote yes on the Aave governance posts. And then, they bought, let's say, 10 units of Index, and they got to wield 100 units of governance power based on buying just that 10. So it was like levered meta governance to get their own thing approved. It's one use case of the Index token. We're kind of always thinking of more recently. We just launched an integration with UMA protocol last week for trust minimized reweighting, basically informing the rebalances of our products. So we rebalanced the diversified staked ETH index last week to add 2 new liquid staking tokens, because Swell Network and others have been added to the index. So we had to kick off a new auction rebalance to add those new tokens into the index. Now, how do we specify in that auction what weights DSETH should be at, right? How much of the RETH token, how much of the Lidos token, how much of these new Swell ones? We used UMA for this decentralized reweighting procedure, where basically people can kind of so we publish the methodology on chain for what DSETH should be. We publish the rules, and then people have to go and follow those rules and figure out, okay, based on the criteria here, it looks like it should be 28% RETH, 22% Lidos ETH, submit that on chain. And then it will be verified by other users on chain saying, yes, that is correct or not. And the mechanism for that is an index bond. So if you want to propose, okay, I believe that based on these rules, the weights of DSEs should be 28% this, 22% that, I've got to put up, say, 100 index tokens. I've got to put up a bond. And then if someone who wants to challenge my submission, they've got to put up an index bond as well. And then whoever is right gets their own index back and a share of the other person's index bond as well. So there's a lot of kind of new space to play with governance tokens. That's one example that we just put in place in the last couple of weeks for a use case for the index token.
I feel like governance is really perfect for what you guys are doing, especially considering there's such a weight in like being able to, for one, be included in an index. Like maybe not today, but imagine in the future, kind of like far out, you guys are $500 billion TVL, like it's just huge. You guys are massive because that's typically how indexes work. Like they acquire a lot of the mind share because most people, the average person, doesn't want to deal with all these things. And so a lot of money gets locked up in these things. And so, it is a big deal. Like, hey, if you're a token or you're a project and you want to vote and you want to like be able to say, hey, we want to be an index around us, or we want to be included in this index, or you're proposing a new index or different things like that. Governance is a really powerful thing. And then like you mentioned, meta governance, that's huge. That's like convex, convex holders are often paid, it's called bribes, but it's like more like incentives to essentially vote because they don't care about their votes. Most of these holders don't even know like how to use these votes. But you'll have somebody like Frax that's like, hey, we want more incentivized, we want more incentives to go to our Frax pool because we want to incentivize more liquidity for Frax. And so what'll happen is they'll like pay, say they want like, $1 million of liquidity. Well, they can pay like $500,000 to incentivize voters. And then, it kind of doubles their money by getting that, those incentives. So, the meta governance is actually huge. The bigger and more powerful you guys get, the more those things are useful. But also it's kind of cool that it's decentralized and you do have this DAO and this governance because that's a lot of power for any one entity to yield. That is what BlackRock does. They wield a lot of voting power over these boards, and it causes a lot of things to kind of skew in their favor. Where with this, holders of index, they get to decide those things, and so it breaks apart that power, separates it out, but also makes the token incredibly useful because of it. So that's cool. I didn't even think about meta governance until you mentioned it. That's amazing.
Yeah, I mean, like you said, index sits at the center of the ecosystem. With our products kind of represent the largest players in the largest sectors on chain.
How big do you see crypto index funds getting in the future, considering how big traditional index funds are?
Yeah, there's no doubt that index products have really won in a huge way over the last several decades in traditional finance space, and we see similar things starting to point in that direction on chain as well. I mean, I don't know, because I don't know what the regulatory environment is going to look like 1 year from now. I don't know what the wallet infrastructure is going to look like 1 year from now. Are we going to finally have, much more user-friendly user experience for people to use self-custody and to be on chain? Or are we going to bungle it and people are going to have to use custodians instead because the seed phrase thing is too complicated and, the social recovery hasn't been implemented well in wallets? But the more successful crypto is in reaching a mainstream audience, the more successful we are in breaking into more and more people's portfolios, the more people are going to want to opt towards index products that simplify their lives. So the more and more successful crypto is in breaking into the mainstream, the more successful index products will be. The stats are pretty nuts as far as what percentage of kind of assets are in passive strategies in the ETF world. So right now we're at like 0.1% of the total crypto market cap is in on-chain index products. And I think it's at least 20% of assets in Europe right now for what percentage of assets are in kind of passive ETFs. So there's a hell of a lot of room to go up from here as far as the share of index products. I don't know what it'll level off at in the near future, but there's a lot of room to climb.
And I'm really bullish on chain activity. If you really think about like a mobile phone, hand it to your grandma who's never used one, and it's really complicated to her. She's actually like, how do you use this? How do you turn it on? How do I use any of the functions and features? You don't think it's complicated because you're used to it. If you actually, on chain can be complicated and it can be risky, and there are really bad UX UI things, but there's also actually benefits that make it easier. Like I have a hard time actually going on like TD Ameritrade and buying Coinbase stock. Like I meant to for a long time, but I'm like, I don't want to go through all the hassle of like setting up my account and going through all this, stuff. So there's actually some inherent advantages. Like once you get used to on chain, once you learn how to do it, it's pretty easy. Like, you know what to do, and I can go quickly buy something. I don't have to worry about all this kind of complicated baggage maybe that comes with buying something traditionally. I think right now we do have things like security that limit people back. Like you don't want to feel like you're going to always get hacked. There's too many of these like airdrop links that drain people's wallets. That's got to get fixed. But I'm seeing it getting fixed. Like MetaMask wallet was like, it's clunky. I don't enjoy it. But like some of these newer wallets like Rabby, like they tell you, hey, by the way, your wallet's going to get drained from this transaction. Boom. That's a huge UI UX upgrade. It shows you all your assets across every single chain. Huge UI UX upgrade. We have chains like Polygon this year. You're going to be able to use multiple chains within the Polygon ecosystem. So you could have their X1 chain, the Polygon POS, like all these different things. They're all connected. They're not fractured anymore. So you could transfer between chains in sub 5 seconds as if you're using the same chain. So now suddenly all this bridging and all that gets abstracted away. And then on the other front, like just bridging in general, you have cross-chain intents that, you don't have to have these huge multi-sigs holding all these assets. There's so many things being advanced in the UX UI department for crypto that's going to make this next cycle just like 100 times easier than last cycle. And I think the next cycle after that and the next cycle after that, it's just going to continue to get better and better and better to where, everyone is going to want to be on chain. And the younger generations, there's this thing called the great wealth transfer where, the majority of the money is held by these really old generations. They have so much money and capital, but they're going to eventually pass away. And that capital is going to the younger generations. And they don't want to buy stocks. They don't want to go, sit in a boring index on a stock market. They want to buy crypto. They want to YOLO into meme coins. But you know what? They're going to be a little bit responsible, and they're going to say, hey, I'm going to stick the majority, maybe 70% into this crypto index, maybe 20% into Bitcoin or whatever. And then I'll play maybe with 1% around in some meme coins, and I'll do my own little thing over here. But I do think it's gonna calm down, tame down a bit. And I think the younger generations are gonna want to put their money into crypto, and they're gonna be used to being on chain. So yeah, to me that sounds like an exciting future when you look at Index and saying, hey, you're here early, but you're going the right direction. So that gets me pretty pumped.
Yeah, I think the largest use case of on-chain is transparency, pretty clearly in my eyes. I think an interesting development last week, the Bitcoin ETF approved, and people were trying to track the flows into these new 9 Bitcoin ETFs that were all approved. And it's like 24, 36 hours after launch. Like the question is like, how many assets flowed into these ETFs? And the answer was, I don't know. Like we've got to wait. I don't know. Someone's doing some paperwork overnight. And like eventually maybe we'll be able to tell you roughly how many assets were in these things, but we can't really track the flows that well. With a great wealth transfer coming to this younger digital first generation, like they expect to be able to see what's going on with their money. Like I think we take it to be pretty self-evident that we should be able to see where assets are and be able to look things up online to see what's actually happening. So that, blockchains have got that part absolutely nailed. The UX is still kind of in progress to make it accessible to more people. But if you have a wallet, you've been able to figure out how to secure your seed phrase. You're early. You're front running everyone else. More and more these institutions are kind of realizing that the transparency of blockchains, the efficiency of blockchains is clearly kind of the future of the financial system.
I could not agree more. The transparency, being able, it won't even be transparency like it is today. Like today, everyone can see what's in your wallet. It's really annoying. We're going to have transparency in the future where like with Aave, with Index, with some of these bigger protocols, you'll know what they're holding. But maybe as a user, you have privacy where you can have privacy with your bank account, your wallet. I think people are going to be able to transact like as if they have a bank account on chain. and that's just going to be a normal thing. You have the speed. You mentioned like people having to fill out paperwork in traditional finance, the money having to move slowly, like in the real world, that all gets gone. That's all gone. And when the UI and UX is better than TradFi, like boom, it's just over. And then you have the neutrality, like the current financial system and the current way that the monetary policy in the U.S. works is it gives a huge advantage to a certain class of people, a certain subset, like it's the government. The people that have the power right now, they accumulate more power because they are the bank in monopoly. They control the bank and they do whatever they want. And this makes it neutral, makes it more fair, more open. And I think it spurs more innovation because of it. And it's just going to attract more and more capital into it, as we go forward. So I'm really excited. What are you most excited about with Index moving forward? So like looking out over the next 2 years, what gets you really excited? You're like, man, I'm really pumped about this thing with Index.
For me, it's all about accessibility. I think making our products accessible to more and more people. That's what really gets me fired up by Index generally. Is we can build, the best strategy we can, and we can offer it with one click. We can offer it to everyone in the world with an internet connection. You can go to indexcoop.com, connect your wallet, and get exposure to the same strategy that the most sophisticated kind of fund manager is trying to do with ETH staking, with diversified ETH staking. We've got an ETH trend index that we just launched with CoinDesk. That's probably what I'm most excited for right now. We launched the Index Coop CoinDesk ETH trend index. Basically, what this does is takes advantage of price trends of ETH. So it allocates back and forth between ETH and USDC based upon what's happening in the markets. So CoinDesk has created this ETH trend indicator. They've been running it for a while now, more than a year or two. I interviewed the creator of it, Todd Groth, when we launched the product back in I think November was when we launched it. But basically, it puts out: are we in a strong uptrend? Are we in a slight uptrend? Are we neutral? Are we going down? Or are we in a significant downtrend? And the product will automatically rebalance between ETH and USDC based upon what the trend is. So, is ETH higher than it was yesterday? That's one check. Is ETH higher than it was last week? That's one check. Is it higher than it was 2 weeks ago? And then we'll look up kind of those scores, how are we trending, and then allocate accordingly. So right now we're kind of early in a market cycle where people right now kind of want exposure to ETH all the way up. They're not necessarily worrying about managing their downside risk at the time. But as we go through the cycle, if we have another down cycle, another crypto winter kind of at the tail end of the cycle, that's where this product will absolutely shine. It will allow people to stay in the market by holding this ETH trend index and not have to sell out and take the taxable gain and then, or take a huge 80% loss or something like that if ETH really trends down. So that's like the product that I'm most excited about right now. And then generally, how do we make that more accessible to more people? How do we get integrated in more and more wallets and front ends in every DEX aggregator across the landscape? How do we get these products available on layer twos is another huge focus for me right now. There's more and more kind of cross-chain checkout or multi-chain transaction tooling kind of being integrated into the world. So we're kind of refreshing our app site right now. We just relaunched kind of our new swap interface where it toggles between swapping and flash minting automatically on app.indexcoop.com, where you can buy our products. And looking forward to adding more support for layer twos there to make it as simple as possible for anyone that has assets on any layer two to be able to buy an index product and have it delivered to their wallet on the L2 of their choice without us having to go create a liquidity pool in all these layer twos, which that's like the main constraint of why we haven't been on all these layer twos right now. We don't have the capital to create our own LP position for all 10 of our indexes on all these different layer twos. It's just not feasible. So increasing accessibility of our powerful structured products to people is what I'm excited about.
Yeah, it seems like, your only options if you didn't have the liquidity would be to do some sort of like, almost like receipt on that other chain that points back to Ethereum. Or you could do something like how Layer Zero has their like burnable tokens. I forget what they call them, but it's like you burn the token.
The OFT, Omni-Chain Fungible Token.
The Omni-Chain tokens. I'm curious, what tokens or like projects besides Index are you like excited about, interested in? If it's not a token, it could just be like, hey, this project is doing some cool things that get me excited, or just for fun.
I've always been a really huge fan of notional finance and fixed rate lending, especially just with how kind of volatile crypto markets are. Being able to lock in a fixed rate of return is huge for maybe a more sophisticated audience on chain. It's something that we have kind of been experimenting with building in for a long time. I really like notional finance as one, and then Rhino.fi, which, you know, a little bit of a plug for us because they're one of our main like distribution partners right now. But I really, really like their model, where it's sort of like this like hub and spoke distribution model, where they will kind of buy up our index tokens, mint them on chain, bridge them over to their roll up, and then essentially like they're set up a little trading outpost there that anybody can access. You can deposit into Rhino.fi from any layer two, and then your assets are kind of held on their layer two. It's still self custody in your own wallet, but they've built this own little their little Starkware roll up. I really, really like that distribution model. So there's kind of a curated environment there of a lot of different products, different strategies, different DeFi strategies there that makes a lot more sense to me than kind of the currently fragmented L2 liquidity environment. So that's another one that I really enjoy.
If people want to learn more about Index and kind of stay up to date, what's the best place they can go?
Indexcoop.com, sign up for our newsletter. Follow us on socials. We're really active on Twitter, as well as Lens. If you have a Lens profile, we post a good bit there as well. But yeah, we have Discord as well if you're a big Discord fan. Not everyone is, but if you're in crypto, you likely are. So you can join the Index Coop Discord. The link's in our link tree if you go on socials or on our website. And we've got a program called the Index Insiders. If you hold more than $1,000 of our products, you can join the Index Insiders, a small little kind of environment within our Discord where you can kind of talk directly to our product team, get access to products when they're still in beta. You can give us feedback on products that we're kind of still developing. The Index Insiders is probably the highest signal place to kind of interact with our team and a community of holders, right? Everyone that holds over $1,000 of index products is in there. And you can chat with your fellow index holders about the future of finance.